How much can Diane convert to her Roth without paying any income tax? Ooh, so this is fun. Her name's not Diane, of course, but I had a client who I hadn't dealt with. I'm see if I can't pull up her email that she sent to me. Check this out. So this legend writes me back. She goes, "Hey Josh, it's been a long time since we discussed my financial situation and my retirement. I still live in, and it's been nearly 6 years since we spoke. Because of the new federal $6,000 deduction, I'd like some help with my tax planning. I'm 67 and I'm single. I finally collect my Social Security payment, because she just hit 67, her full retirement age, at 32.52. I have about 150,000 in an IRA. I need to figure out how much I can take out of my IRA and still be at zero taxes." All right. I said, ooh. I said, man, it's been 6 years. So I texted her back and said, Diane, it's been 6 years? And she says, hold on a second. I said, well, it's been 6 years? She goes, yep, 6 years. I rode the COVID wave, no problem. I had 3 years of expenses and laddered CDs, like what we talked about. Let's see. And then she keeps on to say that basically it's good to see that you got Pablo a friend. And I mean, this is before we had, I was talking to her before we had him. Isn't that crazy? Man, 6 years ago. No, it's before the pandemic. Anyway, so we're going to put her up here, and she rents, by the way. So we don't have a home. We don't have anything like that. She rents, and she's in a very low cost of living environment. Let's just put it that way. So basically, her Social Security covers all her bills because she's in a very low cost living place. All right, just and I'll let you examine where that could possibly be. That's fine. Don't care. But anyway, so we're not worried about. I got a burp. Sorry, burp. We're not worried about anything else other than she has this $150,000 IRA, and she's 67, and she wants to know how much she can convert without paying taxes. All right. So what about health care? All right, so her income here, here's her social. $32.52, that's what she's making. All right. And that covers everything for her. Well, that's impossible. Oh, okay. I hear this all the time, like, people can't afford that. Okay, you might not be able to, but people can't, so stop it. All right, so what we're going to do here is we got everything in, what's her net worth? We got 150,000 just for simplicity. We're putting in, I don't know what I put in, but in 100% stocks, it doesn't matter. All right. So what we're going to see here is we're going to go into, we're in 2025 because she wants to get this done by year end. So we're going to go to her 1040 and we're going to look at her details. And we're going to say, okay, so here's a 20, so we see Social Security benefits, $39,000. Because that's all her income, she has no taxes paid whatsoever. All right. I mean, no taxable Social Security. So here's line 6A, that's her Social Security benefits. Here's line 6B, that's her taxable Social Security benefits. And you can see nothing. Her standard deduction with the increase because the Trumpster, the GOAT, is $23,750. All right. Well, she has no taxable income to begin with, so that standard deduction is essentially waste, is it not? Yes, it is. So, what's her name? Diane correctly said, hey, how much can I convert without paying tax? And so we're going to check it out. So we see $23,750. That's her standard deduction. So a lot of people who don't follow this channel will say, just convert then. We're going to go to profile, $23,750. And we're going to come over here and go IRA. We're going to just do $23,000 for simplicity. Just convert the amount of your standard deduction, Diane, and you'll be good to go. And when we do that, we're going to show you that is incorrect. Oh, she has a, look at that. Look at that. What the heck? Check. 23,000 is her IRA distribution, her Roth conversion, which now makes 11,000 of her Social Security subject to taxation on top of the $23,000 that she converted. So now her gross income's $34,000 minus her standard deduction, to which she increased $6,000. So now her taxable income is $10,000, basically $11,000. So she pays $1,100 in tax. All right. So that $23,000 that she converted cost her $1,100 divided by 23,000. That's a 5% tax rate, effective tax rate. So even though she did the taxes to the conversion to the extent of her standard deduction, because how Social Security is taxed, this is called the tax torpedo, which I've talked about a million times here, that made her pay taxes, all right? So you're like, well, that's not going to work. We don't want to pay any tax, all right? So we come back here. We said, no, let's not do that. Let's do this instead. Let's do $15,000, see what it looks like. So now it's just a bracket. We're just going back and forth, forth and back. And we're going to say $15,000, and we're going to see here. So now she has $15,000 plus her $39,000 of Social Security, only $5,000 subject to taxation. So now her gross income is her gross taxable, or right here, is $20,000. That's a gross income right there, $20,000. Not her gross actually spending power, but a gross income. So $15,000 of conversions plus $5,000 of taxable Social Security. Now she has $20,000 of gross income, but that standard deduction is still above that $20,000 of gross income. So her taxable income is still zero. All right. So $15,000 isn't quite enough. So now we're going to say, well, let's do $17,500 then. Yeah, about $17,500. I'm thinking, let's do $17,500. So we're just bracketing it. All right. Bracketing, going back and forth, until you get right on the button there. And now $17,500, see a little bit of taxes there. So we go over here, we say, okay, that $17,500 of increase of a Roth conversion added an extra $7,000 of Social Security to be subject to taxation, which means her gross income, right here, her total income is $24,560, which is about $1,810 above what her standard deduction is. So $17,500 is still not quite enough. I mean, still a little bit too much, because we want to go to the amount she can do without paying any taxes. And so we're going to do, we'll say $17,200. And this will probably be the sweet spot, I bet. $17,200. Let's see. I imagine that's going to be a sweet spot. Nope, still not quite. $17,200, not quite the sweet spot, because she still got to pay $26 in taxes. So we're going to do $17,100. I mean, again, 26. No one's going to care, but this is her question to me was, how much can I do without paying any tax? And we're going to say $17,100, and we're going to come back here to the tax man. The tax man says, survey says, there we go, $7. So basically, you can see $17,050 is probably going to be, and I'm sure there's a way to do this even quicker than I'm doing, but I'm just a caveman. I don't get your ways. $17,050 will probably get us there. Let's take a look here. Survey says, and it looks like that's probably going to be it. Yeah, right there. So $17,050. So if she converts $17,050, it'll make $66.78 of her Social Security taxable, or subject to tax, and that will give her $23,728 of her her gross income that's subject to taxation, right? Or AGI, if you will, just gross income. I don't know why I keep saying that. AGI minus her $23,750 standard deduction. All right, so in this case, just I would say, freaking Diane, between $17,000 and $17,100, you're gonna be fine. Now, what you're gonna see here is you're gonna say, but Josh, how dare you? Look at this. Why is that going up? How come she has taxes here in these years? Anyone want to take a gander? Why she has taxes in these years? So 2025, no tax. 2026, no tax. You can see standard deduction, still above her gross income. 2027, no tax. 2028, no tax. 2029, $574 of tax. Why? 2030, $566 of tax. 2031, $1,100 in tax. What? And why is that happening? All right, so let's go back to 2028. And you can see her standard deduction is $25,396. What happens to 2029? Standard deduction is $20,000, because that extra $6,000 of standard deduction will go away in 2029. And so so Trump did what basically Obama has always done, and the Democrats, which they have these things sunsetted. So you're like, hey, you're going to raise taxes on seniors, are you? That's good. Just make the Democrats own it. If they take over Congress and the presidency in 2028, and they don't change the tax code, your seniors are going to get a tax hit. That's just a fact. That's a tax hit. And again, if we look here, Diane's income is only $26,000, but she has to pay $574 in taxes. Diane's income here was $25,000. She had to pay no taxes. So in that case, the Democrats will be owning $574 of taxes on a person with making 25,000 bucks. Poor people. Don't want that to happen. So in this case, Diane, who's single and 67, living on Social Security, can convert basically 17,000 bucks. That's what I would do. And I say, absolutely, just convert it and friggin', I don't know, do whatever you want with it, or you can spend it. I don't care, but just do something with it. But get it out of that IRA. All right. Hope this helps. Love to your thoughts. Smash, 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 and we'll see. Oh no, don't smash. Fondle, tickle, and fondle that like button. Why do I say that? Because old Stuart said, Josh, you need help for saying fondle the like button. You need help. And I just kind of thought that was funny. We'll see you.